if humanity stores a lot of wealth in real estate or a lot of wealth in gold, entrepreneurs are going to go out there and try to make more gold or try to build more houses. If we're able to create more food, or we're able to create more oil, we're going to be able to create a lot more of this, but it also applies to our traditional assets that we're holding to save for the future in general. Those things are also going to get debased over time. It's just might happen a little bit slower, which is why people hold a diversified portfolio of them. But now that we have Bitcoin, which is the best form of money ever discovered, perfectly scarce, and money trends to one over time, then you don't have to have this crazy diversified portfolio of semi-scarce assets. You can just hold Bitcoin.
Joe Brunnett is the Senior Product Marketing Manager at Unchained. Joe helps individuals understand the significance of Bitcoin in today's rapidly evolving financial landscape. In this video, Joe dives deeper into one of his latest reports. He explains how the game of wealth accumulation has fundamentally changed with the advent of Bitcoin, a shift that many people still fail to grasp. According to Joe, the traditional strategies for building wealth are being disrupted. In the past, fiat currencies and traditional assets like stocks, real estate, bonds were all considered reliable ways to grow and preserve wealth. However, the rules of this game are no longer the same. Bitcoin, over here, represents an entirely new paradigm. Listen closely, because this video could have a profound impact on your financial well-being and your future. Joe highlights that the key to winning in the 21st century is understanding the power of Bitcoin as a store of value that is immune to inflation, government control, and the failures of the traditional banking systems. Bitcoin's finite supply and decentralized structure create a level playing field where individuals can secure their financial future without relying on intermediaries. In Joe's own words, the game has forever changed. Let's find out how to play it. But before we do that, I want to introduce our sponsors, Stampseed, the Orange Pill app, and Swan. Our partners are businesses and people that we respect and our products that we at Bit Intelligence personally use. You're watching 21 Voices.
The dollar is tied to a basket of consumer goods. These consumer goods are things like food, energy, lumber, whatnot. The dollar is designed to debase or get more expensive relative to all of these consumer goods. And so the dollar is designed to debase against this, yet we're becoming more productive at producing these goods. So a bond, well, what is a bond? A bond is a promise for a fixed amount of future dollars. And there's also risk to bonds, right? There's a risk, there's counterparty risk. So whoever you lend the dollars to, they might not actually pay you back. They might default, whether that's a government, they could print more money and pay you back, which would devalue the dollar or whatever currency that the bond was lent in. Or it could be a company that you lend money and they default and can't pay you back either. And so when it comes to storing your wealth in bonds, again, it's an asset that's tied to the dollar because all a bond is a fixed amount of future dollars, and dollars are pegged to basic consumer goods, and those consumer goods we're becoming more and more productive at producing them year after year. And so it's also a melting ice cube because we're going to be able to produce more of these goods, which means we're going to be producing a lot more dollars, which also means the value of your bond, which is simply a fixed amount of future dollars, is going to be worth less over time. I think a large majority of people in the world today view Bitcoin as like a speculative bet. They think it's, this high-tech, high-growth lottery ticket that could one day be worth millions or one day be worth zero. I think it's very true and likely that one day it'll be worth millions. They're right about that part, but I don't think people are looking at it correctly when they deem it as a lottery ticket. Like, Bitcoin is not a lottery ticket. It's just money. It's just better money. And so this is kind of what Bitcoin is, right? But people don't think of Bitcoin as just money. They think of Bitcoin as the speculative lottery ticket. And so the report uses Bitcoin as a unit of account and money to begin evaluating your existing wealth that you have today, whether that's in stocks, the US dollar itself, bonds, real estate, or gold. And it starts to denominate that wealth that you think is going up in dollar terms, but But in reality, it's actually going down in Bitcoin terms. And because, we're creating more and more dollars every year, the federal, the US government is running multi-trillion-dollar deficits every year. And Bitcoin is just this perfectly finite monetary tool that's being distributed through proof of work over time. And if you're measuring these other assets in Bitcoin, then they're pretty much crashing, especially during the monetization phase of Bitcoin. And one of the reasons is because all of these other assets can be either perpetually produced, like gold or real estate, or they can be devalued by the free market. Like if the world holds $2 trillion worth of wealth in NVIDIA, that's basically a bet that no other entrepreneur, no other, very intelligent human or AI could create another company that actually competes with NVIDIA. And if NVIDIA is valuable because they're manufacturing GPUs at $500 and selling them for $30,000, then it's most likely, if you believe that markets are efficient, markets are highly competitive, that the edge that NVIDIA has probably won't last forever, and therefore storing so much wealth in NVIDIA for the long term may not be the best strategy. So it kind of takes a step back and looks at all of this, all of the wealth in the world, and tries to analyze it from using Bitcoin as the proper unit of account. So there's one section in the report titled Acceleration of Production, and it's kind of recapping how advanced and productive humanity has become over the last 200 plus years. And I kind of broke it down into 5 different sections: farming, data storage, oil, and lumber. Well, I guess that's 4 sections. But I broke down those sections partially, and I chose those partially because when people think of money today, they obviously think of the US dollar. That's like kind of, to some extent, the global reserve currency. It's the hub of the current financial system today. The US dollar basically is just a basket of very basic consumer goods, right? It's pegged to a basket of oil, of food, of lumber, all these basic consumer goods that we need, on a daily basis. And not only is it pegged to these basic consumer goods, but it's actually deflating against these basic consumer goods. It's becoming less valuable relative to these basic consumer goods like food, oil, and lumber. And so in the acceleration of production section, I go through something like farming, where I show that, okay, in 1930, one American farmer could feed 4 people, but by the 2010s, one farmer was feeding 155 people, just kind of highlighting how much more productive humanity has become in terms of farming. Yet, it's funny because the price of food, compared to 1930, has gone up massively, maybe 100x or even more. But it's kind of ironic because we've become basically 100x more efficient in producing the food, or close to it. And so it's kind of like this double-edged sword where not only is the dollar devaluing against these basic consumer goods, but these basic consumer goods are actually becoming more abundant than ever before because of technology. And so that's kind of the general idea of showing that, okay, we're able to produce all of these basic consumer goods, farming, data storage, oil, and lumber, and the dollar is still losing more value relative to these goods. And then it kind of goes a step further. Won't talk about this for a while, but it's kind of a preview of like traditional assets of just like being able to produce more food, or just like being able to produce more oil, we're able to produce more houses. We're able to produce more gold. They're slightly more scarce, which makes them better stores of value than holding your wealth in food or barrels of oil. But they're still not perfectly scarce like Bitcoin. We're still, if humanity stores a lot of wealth in real estate or a lot of wealth in gold, entrepreneurs are going to go out there and try to make more gold or try to build more houses. And so it's just showing that, okay, if we're able to create more food, or we're able to create more oil, we're going to be able to create a lot more of this. The dollar is going to get debased because that's the nature of the dollar, and it's going to get debased pretty rapidly because those things are becoming more and more abundant, exponentially more abundant. But it also applies to our traditional assets that we're holding to save for the future in general. Those things are also going to get debased over time. It's just might happen a little bit slower, which is why people hold a diversified portfolio of them. But now that we have Bitcoin, which is the best form of money ever discovered, perfectly scarce, and money trends to one over time, then you don't have to have this crazy diversified portfolio of semi-scarce assets. You can just hold Bitcoin. I think of Bitcoin as something like gunpowder, right? Like gunpowder is a very critical tool in war or survival, and Bitcoin is the same thing but for money rather than physical violence. And if you ignore something like gunpowder, and you have bow and arrows, then you're going to be worse off because your enemy is going to have gunpowder and they're going to conquer you. Whereas Bitcoin is kind of the same thing, but it's from an economic or financial perspective. If you have inferior forms of money, whether that's shells, glass beads, or ray stones, or the US dollar or gold, then someone with a harder, better form of money is simply going to outcompete you. They're going to, perform better than you. They're going to make better financial decisions than you because they're going to have a higher hurdle rate. And so Bitcoin is that better tool that makes everyone actually save for the future. It increases the hurdle rate of what's actually going to be a good investment. And because it's perfectly scarce, and because all of these other traditional assets that we're holding are not perfectly scarce, means that Bitcoin will likely be the asset that is able to preserve its wealth the best over the next 100 plus years. And I think it's also really important to note that it's not just the perfect scarcity of Bitcoin that makes it so great. It's because Bitcoin has superior monetary properties. And so those monetary properties are things like being divisible, portable, durable, and fungible. And because the whole point of money is for economic systems to converge on one best good, because if I have apples, you have bananas, and we're trying to trade, well, then I can only get the bananas from you when you want apples from me. So that creates kind of a problem. There's seasons and stuff like that. Apples and bananas aren't very durable. You can't hold it very long. So we as a system have to converge on one best tool that we're going to be using for savings and trade. And typically what happens is economic systems end up converging on the one best tool that has those specific monetary properties. And if you evaluate Bitcoin compared to other crypto or gold or dollars or shells or glass beads or ray stones, Bitcoin is objectively better comparing the Bitcoin's monetary properties to the monetary properties of other monetary tools. And I also think that it's important to know that the core of the argument is not just speculation that we'll eventually discover more gold or we'll eventually build more homes or manufacture and sell GPUs. But I think it's likely that we'll be able to do that. But it's unlike, Bitcoin, where if you hold gold or you hold real estate, you're effectively betting that other people that hold those assets won't cash out into Bitcoin before you do. Because if even if housing or gold gets debased at a very slow rate, it's still going to be debased, and it's going to be reflected in the price of those assets. And so if gold is slowly going down in Bitcoin terms, that's still a pretty massive incentive to immediately cash out your gold and buy Bitcoin as soon as possible. Because you also have to realize that if other people that hold, the $15 trillion worth of gold out there, if those people realize that there's effectively this arbitrage opportunity where you can sell gold and buy a lot of Bitcoin today, at least compared to 10 years from now, you're going to want to make sure you cash out of gold before everyone else cashes out of gold. Same with real estate. If you're just hoarding real estate and not, and you're maybe renting it out or just holding it for no good use or for basic store value, then you want to make sure you sell your real estate before everybody else tries to sell their real estate. And that's how you get more Bitcoin than everybody else. And then once you're in Bitcoin, there's nothing really better to cash out to. You've cashed out already. It's like once you have Bitcoin, you can either do two things. You can either spend it and consume today, which is fine. Like there's nothing wrong with a little bit of consumption, or you can invest it. And again, in a Bitcoin world, the hurdle rate for a profitable, good investment is going to be significantly higher. So you won't necessarily have to invest to preserve and even grow your wealth. Because kind of like we talked about it, farming, oil production, lumber, these things are all getting so much more efficient and productive. In the long run, a lot of these advancements in this efficiency and this productivity shouldn't necessarily go to, the producers that create or that produce food, or miners that mine gold. The market is efficient. So if someone's making a lot of money producing food or mining gold, then there are going to be other people that go out there and produce food and mine gold. So not even the companies that produce these goods and services may be super valuable in a hyper competitive advanced market. A lot of the wealth from this hyper productivity in hyper competitive markets might just end up getting stored in Bitcoin, because it's the one place where if you try to store wealth in anywhere else, then the market's just going to go out there and eat it up. So Bitcoin is kind of like that one asset to where no matter how much wealth that you store into it, the market and technology and entrepreneurs out there can't really extract that wealth just like they are currently extracting wealth that's stored in real estate, gold, and things like NVIDIA by going out and mining more gold, going out and building more houses, and going out and funding startups that can compete with NVIDIA.
Please bear with us for a quick message from our sponsors. These videos take a lot of time to make, and we've partnered with brands we trust like Stampseed and the Orange Pill app in order to get the funding we need to bring you these videos every week. Don't store your Bitcoin in cold storage without stamping your seed phrase on an indestructible titanium plate. Stampseed is fireproof, rust-proof, impact-proof, and easy to hide. It has no loose parts and will give you ultimate peace of mind that your Bitcoin is safe and sound for the long term. Click the link in the description below for 15% off your stamping kit. When I finally got Bitcoin, it hit me like a lightning bolt. It was the currency of the future, the only money that truly mattered. But there was a problem. I didn't know anyone else that thought like me. That is until I discovered the Orange Pill app. Suddenly, I was connected with a network of like-minded Bitcoin enthusiasts, right in my own city. The Orange Pill app is more than just a social network. It's a community of passionate individuals determined to change the world, one Satoshi at a time. This series is brought to you by Swan and created by Bit Intelligence. Remember to like this video and subscribe to both our channels for more videos like this every week. Thanks for watching.
In the example of, or the section of why most wealth will accrue to Bitcoin, I talk about two examples. One is the calculator industry. When calculators first started out, they were kind of luxury items that were stored, or that were held in your house, right? It may have costed $400, and inflation adjusted, that was $3,000 today. So fairly expensive to own a calculator. And along the way, people may have been investing in a diversified portfolio of calculator companies, whether that's the equity of the companies or the debt issued by the companies, the bonds, or like real estate that the factory of the calculator company was being built. And so you'd be holding this diversified portfolio of calculators or calculator assets in the industry, and yet over time, these assets ended up melting away effectively, right? Like now we all have calculators that are free. They're in Google search, they're on the iPhone, they're in your smart home device, and the calculator companies, a lot of the early calculator companies don't even exist anymore. And so the ones that do, that still exist, they pivoted and did some other, new product or service that they ended up selling, to the world, which is definitely fine for them to do that, but it required risk taking and speculative bet and entrepreneurship to not just make calculators. But focusing specifically on calculators, the companies if people held wealth in the calculator companies like they would do today with a diversified portfolio of, whatever industry you want or whatever product you want, that wealth ended up melting to zero. Yet, we got very wealthy in terms of how many calculators we can buy. We can buy infinite calculators for $0 and 0 Bitcoin. And so I think the same thing is going to play out like in the strawberry industry, for example. And this can be applied to basically every product or service that you'd see today. But if today, people might be holding their wealth in a bunch of different strawberry farming companies. And if we have a massive breakthrough in AI and robotics, and let's say the cost to produce a strawberry for these strawberry farms drops 99%, well, what would happen? One, these strawberry farms would get hyper productive really fast, or they'd be very profitable really fast. And then from there, other companies or other entrepreneurs would be like, oh, wow, like you can now manufacture or produce a strawberry for 1 cent and sell it for 4 cents. I'm going to go start a strawberry farm. And that what happens there is the market gets more efficient, more people, more entrepreneurs, more companies enter the market. The cost to produce a strawberry, fell 90%, but now the selling price or the market price for a strawberry, on Instacart or Publix or Kroger, that's also now collapsing back towards 1 cent, towards the cost of production, if markets are competitive and hyper efficient, which I think they are becoming more and more so over time. And so if that happens and the price of a strawberry then drops to 1 cent or close to 1 cent or 2 cents, let's say, then where did all the wealth actually go, right? Because just like calculators, it didn't necessarily accrue to the companies that initially started building calculators. The strawberry companies or the strawberry farms might not, have a large portion of the world's wealth today, and especially wouldn't have a large portion of the world's wealth if, the price of strawberries collapsed due to massive AI. And so where does the wealth actually go? Well, in my opinion, it will go to the consumer who's probably holding the best money, and that's Bitcoin. And so that's kind of why I think over time, a lot of today's wealth that you see will end up accruing to Bitcoin over the long run.
Guess what? It just got a whole lot easier for regular folk like you and like me to succeed. Bitcoin is a fundamental shift in how we approach investing for our future. If you can't beat Bitcoin's returns, then there's no need to invest in any other assets unless you have a high level of confidence in its ability to outperform the money that you hold in self-custody. This is playing out right now in front of your eyes, and the fact that you just watched this video in full means that you already are on your journey to figuring it out. Those who think fiat currency and traditional assets alone will preserve their wealth, and who continue relying on old rules, the old system, just risk being left behind. Bitcoin is just money. It's better money. It's better than your cash, than your credit card, than your stocks, than your bonds. It's even better than your house. If you're not saving in Bitcoin, you're missing the mark. Your wealth is melting and it's refreezing into Bitcoin. Don't be ignorant to this reality. Don't be the person that looks back and wishes they just understood the game sooner. Stay tuned and remember to subscribe for the latest recaps, insights, and films about all things Bitcoin. This is 21 Voices. If you want to watch another episode, try this one here.